This is the Australian S&P share market with the Bollinger Bands widening out so that they can reach the next support level at 5,200. Perhaps the Bollinger Bands can be seen here, but perhaps not. But the problem is that with the first recession in 24 years coming, then even at that support, things might not go well. There are various support levels, and we need our politicians to start arranging for revenue, otherwise we'll just go through from one to the next to the next. It's up to them, and it's up to you to make sure that you harass them. Over a year ago, I showed this diagram in the shop front of the vacant former Brooks shoe store in Griffith, New South Wales. At that time, the former government was boasting about no debt, that they had saved us from being affected by the great financial crisis, and that we were the envy of the developed world. This was showing that being the best of a bad lot is not a recipe for future success. This diagram from the Australian Bureau of Statistics showing Australian GDP growth really shows how the lack of revenue is really putting us into trouble. This was held up by the mining boom, and now we need revenue. We've got means of how we would select it, but not the government. This time, with the first recession in 24 years lurking, there are no funds to ward off the next GFC. Since producing this diagram, the mining boom, as we say, is no longer there to help. The most recent trend should be stirring people to discuss their future with the person they plan to vote for in 2016. On the 16th of May 2014, I produced this diagram based on revenue increasing slightly. That was my projection. Now, what's been happening, and while that was increasing slightly, it means that the curve of debt can gradually move down. But what's been happening since I drew that is that our revenue is dropping. Instead of going up slightly, it's coming down, and at a fairly brisk rate, as we saw just a while ago. What this means is that this curve for projected debt is not going like that. It's going to be coming up out the top of the page. This is something that we really need for people to understand. With decreasing GDP growth and car manufacturing and all of the industries supporting it ceasing next year in 2016, that projected debt curve, it looks like the only place for it to go is up, with an even steeper curvature. Joe Hockey tells us that Australia has always needed to borrow from overseas. I do not believe him, but that is certainly the case now. Joe needs to find revenue, and we'll give examples. This is definitely not representing our current situation. This is what we need. We need Joe to look at things of revenue like $1 fixed at 60 cents or less. Selective tariffs starting with imported structural steel. Zero tolerance of impurities in imported food and drink. Open tariffs at the lower lakes. Countervailing duty to increase income of citrus. Staged Bradfield scheme to allow farmers in North Queensland to earn more for themselves and for Australia. There are more. Just listen to the ordinary Australian. The 5 Pillars policy by Tony Abbott is leading the agricultural white paper to this bureaucratic financial death trap. The white paper was initiated by Barnaby Joyce, but it seems that Tony Abbott and Cabinet are the ones who are calling the shots. And so he's not coming to Barnaby Joyce, he's going to Morris Newman, who's a former banker. Morris Newman will be talking to this group 3 or 4 times a year, and then sending messages up to the big cheese, Tony Abbott. But when you're looking at all the things he's looking at, manufacturing, agriculture, services, education, resources and other, agriculture represents something like 2% of the total. So how much is agriculture going to be heard by Morris Newman? Even when we come to agriculture, then we've got forestry, HAL and fishing. HAL is Horticultural Australia Limited, not-for-profit, industry-owned company. It works in partnership with Australia's horticultural industries to invest in research, development, marketing programs. It's got a whole myriad of things, and yet the one that we will be counting on will be that portion that comes down through this very thin conduit into vegetables, nuts, tropical fruits, stone fruits, grapes, citrus. So we're one of just, this is looking at, if we're looking at Valencia oranges, we're just one of a very small group here, which is one of a very small group there. But when we come down here, and those representing us, Citrus Australia and Griffith and District citrus growers, are looking at navel oranges for export, not for Valencia oranges. So that this whole mishmash of things is, well, I guess it really summarised by the total. Centralism gone mad. We'll probably put a whole session on this particular thing. This is in a very bad way. Once the bankers have taken everything else they've got, then they'll come in and get whatever gold they happen to have. Michael McCormack, you are the Parliamentary Secretary to the Minister for Finance. Why will you not, as our member, debate these issues? Whatever gold we have, we want to be ours. One of my books, which has not yet been published, is Australia's Establishment Failing. The cover has not yet been agreed. The establishment would not communicate, but a breakthrough came when ACCC fined a small Australian juice manufacturer for what I consider to be a relatively trivial infringement, while completely ignoring the issues which have caused so much damage to the community, which continued after the opportunity for common sense in April 2012 was lost. I was looking for a chink in the armour of the establishment, and I believe that has been found.